The following podcast is recorded and produced by Emerge, a media creators co-op.
Welcome to the Defion Productions podcast. I'm your host, the hardest working nobody in Bitcoin, Don, and we have a special guest in studio today, local Niagara Falls legend, Dominic Macri. We're going to talk all things Bitcoin, all things crypto. Dominic is a friend of my former podcast co-host, Troy. It's kind of how we met. And for those of you that have been watching this podcast for a long time, Troy was more the crypto guy. He believed in ETH. He was the ETH maxi. I was the Bitcoin maxi. Troy was very knowledgeable in regards to crypto and all that kind of stuff, but we fundamentally disagreed on how we viewed this ecosystem, me being the Bitcoin only and him feeling that there was value in some of those tokens. I brought Dom on the podcast because Dom is a crypto guy, but he's a couple of levels above where Troy was. I think we're going to align a lot on the Bitcoin stuff, but I did want to bring him in because I want to hear his perspective. And Dom is about 20 years younger than me. So his perspective is going to be coming from there. So I want to use this podcast as kind of a platform for any viewer to kind of see the generational difference in thoughts, ideas, and then some of the places that we're going to come together on. And I can kind of talk about why I think what I think. Dom can talk about why he thinks what he thinks. And I think we can have a really, really good conversation in regards to Bitcoin, crypto, investing, and finance. Shoot it over to Dom. Dom can kind of like introduce himself and kind of talk a little bit about whatever you want to let the viewers know about how you feel about the crypto sphere.
Yeah, it's a wild journey. So nice to meet everyone here. My name's Dominic Macri. I've been in the crypto space for about 6 years now, so not as long as Don, but you definitely learn as you go through experience and just a lot of self-knowledge development. So yeah, I'm just happy to be here and talk about finance and Bitcoin, things I love.
So you've been in this for about 6 years, so that coincides with basically the pandemic, I would say.
That's exactly when I started.
Okay, so you're in a spot where I would say many of the newer Bitcoiners kind of fall into, sitting around during the shutdown, free money flowing, getting stimulus checks. Robinhood at the time, I think, is where a lot of people were finding their first introduction to crypto because Robinhood had it on there. That and the GameStop stuff and the AMC stuff. That's kind of the introduction to people in this ecosystem. For me, I've shared in this podcast before, my introduction came through gold and silver investing. I was an original sound money guy, obviously still sound money, and I believe Bitcoin is the soundest of sound money. And I found Bitcoin through my Silver News newsletter, and I've talked about it before. I thought it was a scam beginning of 2013 when it was like $50, and then all of a sudden it shoots up to 1,000. I'm like, hold on a second, I got to do some more research, and then went down the rabbit hole. And it took until COVID, even though I was in Bitcoin in late 2013, December of 2013, and owned it. And, was buying and selling, and I don't want to say trading, but I was buying, taking profits all the way up until COVID happened. It wasn't until COVID happened that the light bulb really went on for me. And I was like, oh my God, like I really stumbled onto something. And the last SAT I ever sold was February, I believe it was February of 2019 or 2018. I forget which one. 2018. February of 2018 is the last time I ever sold a SAT. I've only accumulated since then. So I want to kind of start this conversation by asking you, because I am Bitcoin only, but I want to ask you, what is it about Bitcoin that you like? And then what is it about altcoins that you find value in presently? So we can kind of start there.
So Bitcoin, I mean, the big thing about Bitcoin is I agree with you. I think it's the best sound money that we have. It's more portable. It's more scarce than commodities like gold. Obviously, we know, whatever you're buying, it's 1 out of 21 million. In fact, it's less because of, supply that's lost and everything. But I just believe Bitcoin down the road is it's basically designed to work against our monetary policy. Obviously with the Fed, it's a slow death to our dollars. I like to look at it. We're slowly just debasing our dollar, killing our purchasing power, and it's ironic that Bitcoin was made, um, a year after the great financial crisis.
So, technically, the white paper was written in the middle of it because it was released October 31st of 2008. That's when the white paper was released. So he was writing it in the middle of Lehman Brothers collapsing, and he or she or they or whatever Satoshi is, was writing it during the times of the great financial crisis, like in the middle of all of that. And the other thing too is, like you had mentioned, like 21 million. It's 20,999,999. It's like right under. It's technically not 21 million. It's a shade under how many.
I wonder why.
There's a mathematical reason, and I'm not mathematically inclined enough to understand it, but I know it's like technically it's right under 21 million. But yeah, anywhere between 3 and 5 million, depending on where you get your information, are considered to be lost. So owning an asset that's 15 or 16 million in existence, with an actor like Michael Saylor out there owning almost 1 million of them, with Satoshi's wallet having 1 million of them, with sovereign wealth funds and other Bitcoin treasury companies continuing to accumulate, whales continuing to accumulate. It is a pristine asset. So let's talk about the great financial crisis. Is kind of a good place to start, because that's really the ethos of all this, and that is the thesis for Bitcoin. So that's a good place to like keep as our reference point, because I think I'm going to come back to that when we have this conversation. But the whole idea of creating Bitcoin was to give us an alternative to that system, which is debt-based. Our system is debt-based. Like if you look at a dollar bill, it's all debts, public and private. They continue to create money. The system only runs by creating more debt. You pay off previous debt by creating more money, and then you're just continually rolling the debt. And now we're sitting at 40 trillion.
Yeah.
So it's a solution to the debt-based Ponzi scheme. So let's move the conversation into crypto now. So there are technically millions of crypto coins, millions of coins. If you focus on the ones that have any sort of relevance, you could probably take that million down to what, 500?
Maybe less.
I mean, if you throw some names out there, like you'd know the names. The top, if I don't have CoinMarketCap up, but if you look at the top, maybe 20 to 50 tokens, like you'll start getting in the lower billions of market caps, and maybe even under that. So like, is a token worth 400 or 500 million? Is that really even, like, I mean, how much liquidity is in that token? So like, yeah. So for me, I have no value in any of these tokens. I think they're all complete trash. I think that it's just basically a tokenized version of the debt-based system. We can talk about some of the major ones. I won't hit your ETH one yet, but I'll talk about XRP. We joked about earlier, the XRP army. I mean, Brad Garlinghouse being the creator of the token, as well as on the Ripple Labs. I believe last time I looked, it's like 38% of the supply is held by Ripple Labs. Yeah. So it's such a centralized token. It's completely the opposite of a decentralized system. And you'll have the XRP army come in and tell you that it's centralized or decentralized, and they have absolutely no idea what they're talking about. No, it's a garbage token. You have another one, Litecoin, which is one of the original altcoins. If going back to, I believe 2010 or 11 was when Litecoin was created. And it was basically a fork of Bitcoin. It's a fork of Bitcoin, same code. Instead of 21 million, it was 84 million. And even the creator, which was Tom Lee, sold all of his tokens. He doesn't own any of the tokens. And he's even been on record saying you should own Bitcoin. And those are some of the major
Zcash
guys that forks. I mean, and so we can talk Solana, downtime of Solana being down multiple times. So like, these tokens are basically, in my opinion, just tokenized versions of fiat. It's basically the debt-based Ponzi scheme tokenized, whereas Bitcoin is the complete opposite of that. So I want to pose the question to you, and we talked off air before we came on, and I asked you which one you feel like has the most, and I put in quotes, value, and we can define what value even is or what that means. And you kind of said ETH, and Troy was the same, but Troy had Troy was like ETH and a couple other ones too, but I know you do focus, and I think you do own some ETH too currently, right?
I do own a couple altcoins, but they're very small
Okay.
positions.
Okay.
Like I do own a little bit of Solana, tiny bit of Chainlink and AVAX, but my big two positions are Bitcoin and Ethereum.
Why Ethereum?
The thing with Ethereum is I feel like it's basically like it's going to be the sediment layer for our traditional financial system. So when you look at it, I mean, even just the bills that are being passed, the Genius Act, the Clarity Act, one targets stable coins, the other is going to target, regulations for, DeFi and everything regarding crypto. So, I mean, the big thing with Ethereum is tokenization. So if you looked at 2024 compared to now, we only had about $1 billion tokenized in assets as compared to today. We're in the 30s. And this is before any, railroads are in place from the Clarity Act. You're seeing banks, BlackRock, they have Securitize, JP Morgan. They're all flocking, primarily using Ethereum's network to tokenize money market funds. And I just see the big picture is a lot of things being tokenized, eventually real estate, pension funds. I just feel like there's a big market that they can capture, and there's actual real world utility by using Ethereum.
So you brought up the settlement layer aspect. I'll take it back a step, and I know we're talking about Ethereum, but I want to talk about XRP again for a second, because the big thing with XRP has been what they've been telling us is that the banks are going to be settling on XRP. And I've been hearing that since 2016, 2015. We're like 10 years into that story, and, SWIFT still exists. No banks are using them for anything, to my knowledge. So that idea has just been completely put to bed. And I don't see I see no value in XRP at all. The only value I will give you, and this is just like a throwing them a line, would be in a raging bull market of Bitcoin. XRP probably moves up. And if you're a fiat maximalist, you'll make some fiat in that. That's the only value I see. Outside of that, it's garbage.
That's just because it's a smaller market cap. But we've seen people think, oh, if I just throw my money in this, $10 billion market cap crypto, it's going to outpace Bitcoin. And the thing with the last bull market is that we didn't really top on like a euphoric stage. We never got like that altcoin season that everyone expected.
Everything bleeds against Bitcoin.
Yeah.
Everything bleeds against Bitcoin. But back to the point that you made about Ethereum, I might have conceded that argument maybe a couple of years ago. I feel like, and you brought up the Genius Act and the Clarity Act, and that's good. I think those are good places to have this conversation. I don't see, and again, now that the Genius Act and the Clarity Act, well, Genius Act for sure, Clarity Act potentially in the next couple of weeks is going to be passing. My perspective, from what I'm gauging out from our politicians, I think all that is based on stable coins. I don't see, and again, the other thing too is you have to remember, and we talked about this off air too, like people living on a Bitcoin standard. I don't want to spend I don't spend my Bitcoin. I haven't spent any Bitcoin in 10 years. Settling in Ethereum, settling on an asset that has volatile value isn't going to make sense for, John Jones that lives in Wisconsin that's just trying to buy something. Stable coins, again, I'm not a stablecoin proponent. I think they're trash as well. It's just that is legitimately tokenized fiat. Like, I don't think we can argue that. That's what it is. It's tokenized fiat.
Yeah.
But if you're going to settle anything on any rails, it only makes sense to do it with stable coins. So to use the argument to say that Ethereum will be a place for settlement when stable coins exist kind of makes it. Plus, again, I'm not a huge like under the hood type guy on what Ethereum and how it operates. But from what I've been told, it's pretty archaic. And there's many other chains that are more updated that would be a better place to go if you were going to do those types of things anyways. And I'm not here to, I don't really want to debate that because I don't I don't think any of them are good for that. So you
Right.
might be able to say that it's better, and I don't know, but the settlement aspect is fair because that's where we're going. That's why the Genius Act and the Clarity Act are even being brought forth. That's why Senator Loomis is like co-opting the Bitcoin conversation when it's really not about Bitcoin. Like the strategic Bitcoin reserve that everybody was so excited about, it was never about that. It's about stable coins, because all stable coins is tokenized. It's a tokenized digital dollar. It's all it is. And it's centralized. They can control it. Who'd they bring in? The Trump White House that's a big owner of one of the biggest stable coins.
Who
Howard Lutnick.
Oh, Howard
Tether.
Lutnick. Oh, I didn't even know that.
Tether. He's huge. He's got a huge stake in Tether. Then you got the USDC stuff. So like you have all these wheels in motion. So the value for ETH being a settlement layer, I think if this Clarity Act gets passed in the next couple of weeks,
I don't think it will.
I don't think it will either, but I don't really care if it is, honestly. As a Bitcoiner, like this stuff
really
is irrelevant to me. It's irrelevant to me. But in the scope of the conversation for the ecosystem, and just as a bystander watching all this thing play out, I think you'll see things accelerate if the Clarity Act does pass, and you're going to see the stablecoin stuff really move forward.
Yeah.
And again, the value for ETH is always going to be speculative. The value for ETH is speculative. The value for XRP is speculative.
Definitely.
The value for hype and all. And again, some people think that the value for Bitcoin is speculative because they don't understand sound money. They don't. The same way like gold is speculative. Like gold and silver are not necessarily speculative. Those are places that you're not putting money to like. I'm not putting money in gold and silver to pull it out in 6 months and go do something with it and hope that it went up in value. That's not speculation. I'm holding that for like long-term value. And I feel like the same thing with Bitcoin. Like you're putting it in Bitcoin as a store of value. And again, people are going to say it was 126 in October, and here we are at 60. And I don't want to rehash the conversation of the last 4 epochs. I don't call them cycles. I call them epochs over here, where the price went up, threefold, came down 80% to only go up again fivefold to go down 60%. Like, you know what I mean? The volatility, like we're not gonna hash that out in the middle of an epoch where we're down at 64 when we both know in 2 years we're gonna probably be sitting at 250, and like the conversation will kind of be moot at that point.
I mean, my thought is any asset that I've ever owned that I've done well on, it usually has 50 to 70% corrections. So I know you're not an equities guy, but I've invested in NVIDIA since 2020 because I work for an IT distributor, and all I heard from partners was, I need a GTX graphics card. I need a GTX graphics card. And those were backlogged for 6-8 months. So I did research on the company. I liked their investments in the AI, even though I fully didn't understand it yet. But as I invested in them, they dropped 65, 70%. So no one wanted to touch NVIDIA then. And then now you look at it 5-6 years later, it's probably 15-16x times then. And I think it's the only asset that's right up there with Bitcoin in terms of like compound annual return over the last 10 years. So,
yeah,
I mean, a 50, 60, 70% drop should not scare anybody. Like if you have conviction in an asset and you know that it's going to actually do something. In this case, Bitcoin is just more like it's sound money. You know what you're getting when you buy it. But yeah, I mean, that's just my takeaway, 50, 60, 70% drop doesn't scare me.
NVIDIA is one of the few equities that actually, if you want, like we can define value, but in my opinion, has real value. It's one of the Mag 7 or Mag 8 now, if you want to add SpaceX in there, but there's a conversation to say SpaceX it's not profitable. It's not even making money.
Yeah.
But we'll talk about the Mag 7. Like NVIDIA and the Mag 7 basically carry the S&P. Like you pull those out and you're actually against inflation, negative value. You have negative value. You pull the Mag 7 out and you do the other 493 stocks, you're not even beating inflation. Like that is just a terrible return. So that's one of the few companies that actually has value, that's creating value. But the bigger conversation, which again comes back to why Bitcoin was created, why does the stock market itself even have value? Where's the money coming from? That's the conversation that comes back to Bitcoin. Why does the stock market is it really, like, if on a conversational level, is it really worth the numbers on the screen? Like if we've teleported somebody from 1980 to 2026 S&P 500, NASDAQ, and Dow, and they looked at the screen, they would not believe that that's what they were seeing.
Yeah.
Right? I mean,
yeah, it's very true.
That doesn't exist. You can't have that without insane levels of money printing. So we can have a real conversation. And you talk about value with NVIDIA, which it's tough because NVIDIA is one of those ones that actually probably really has value. They do produce something of value. But there's a majority of equities, in my opinion, again, not financial advice, my opinion, that technically only have value because more dollars have been printed, put into the system. And we know that where does the money go? The money goes to assets because people with money invested in assets and never get affected by inflation because their assets outpace inflation. So they're never affected by it. It's a Cantillon effect. Those closest to the money printer don't feel the effects of inflation. They pass it on to the people at the
middle class.
By the time the money gets to us, it's already bypassed inflation.
Yep.
So the people, the 87%, 83 or 87, one of those two numbers, either 17 or 13, own all the assets. They don't experience inflation. And then the majority of the rest of us that have money in the market, most, have it in 401ks, have it in 403bs. They have it in these vehicles that they can't touch for 30 years or more. So they're not really making anything. They're seeing it on paper, right? They see it on a balance sheet or their app, but they're not making anything. If they touch it or do anything, there's going to be consequences for that. So even that money that would be attributed to the rest of us is still held by the people that have the Cantillon effect going on, which is the entire reason I'm a Bitcoiner and I'm sitting in this sphere, because Bitcoin isn't affected by any of that stuff. I can own the amount of Bitcoin that I own, and Michael Saylor and Strategy can own the Bitcoin that they own, and we both had the exact same effect on the system of Bitcoin, which is zero.
Yeah, I can't disagree. I mean, my takeaway is that equities, I mean, yeah, like the S&P 500, what does it historically return? Like 9%, maybe a little higher as of late, like 11%.
I think with the inflation going up, it's only gone up because of inflation. It used to be for like 30 years, it was like 7.1 or something like that. But I think it's only gone up, not because the returns have gotten better, because the money supply has expanded. Yes.
Yeah.
Yes.
Yeah. I mean,
which people don't understand. They don't get that.
Exactly. And unless if you invested more heavily in like the tech sector, you probably didn't have like.
But that's where all the money goes, is the tech sector.
Yeah. Yeah.
That's where the money flows. It's flowing to it's right now it's flowing to AI.
Oh yeah.
AI is just taking everything. That's part of the reason why we're sitting where we're at in this epoch right now. I truly believe it's the AI bubble or whatever you want to call it that's been sucking money from Bitcoin specifically. I think the price would probably be, we probably would be not in the 90s right now if it wasn't for all this AI stuff, because we didn't get that, like you said already, we didn't get the euphoric blow off top like we typically get in this ecosystem. So we probably weren't going to get the 90% drop either, which we haven't really got. We've only really got about 50-ish percent, because the bottom so far has been like 58-ish. I think that's where we bottomed. 57, so we're like a little over 50%, which in a bear market for Bitcoin is like nothing. That's nothing, right?
Yeah.
And here we are today. Like we had this, I was messaging you earlier, and the price went down to like 61 when they saw that Saylor and Strategy had sold, and then it recovered. It was at like before we started filming 64 something. It was actually higher than it was before that news got dropped. So back to talking about ETH again, because I want to get back in that conversation. I don't know if. Let me ask you this question before I get to that. Do you consider ETH to be sound money? If so, if yes, why? If no, why?
I guess I look at it as a productive asset.
What is it producing?
Well, it's essentially transforming traditional markets. So, I mean, I know you said stable coins you don't necessarily believe in because it's tokenized fiat, but it's capturing 60% of stable coins. And the big thing is smart contracts and tokenization. So it captures about 50% of all tokenized assets. So the idea is, as tokenized assets grow over time, that's more revenue and more gas fees that go on Ethereum, and the price of it should carry.
What we were being told in 2017, because you weren't here in 2017, and I was in the Twitter streets in 2017, and I can tell you what the conversations were. What we were being told. We were being told in 2017 that in 5 years, which would have been 2022, we were going to be getting our mortgages on Ethereum with smart contracts. We were going to be getting our taxes, our property taxes in smart contracts on Ethereum. We were going to have all these things that were going to be digital now, that we were going to take away from the paper system of, going to town hall or going these places. And it was all going to be put on Ethereum because of smart contracts. And 2017 is almost 10 years ago. And in this ecosystem, we'll just say technology. It doesn't have to necessarily be crypto. Shit moves quick. So to be sitting here almost 10 years later and to have none of that, it's when I think of that, and again, these are all just a combination of things that make me feel the way that I do. It makes me think of like XRP with Swift. Like, these are promises that we keep getting. And again, part of the problem, in my opinion, is that you don't have an asset that's truly decentralized that can just grow. Like, the system can just grow because nobody's holding it back. The ETH Foundation has made the biggest one in this last epoch. I think we can agree on was, at least I don't know how you can't see it this way. I think the price would be much different if this never happened. The switch from proof of work to proof of stake legitimately almost killed Ethereum. It almost killed the chain. It was close. It was really close.
See,
it did damage.
I feel like for Ethereum though, proof of stake, I'm not, because I just look at Bitcoin and Ethereum as two different assets, obviously. Like, one is your savings, your store of value, and Ethereum, it needs to scale. It needs to have low gas fees. It needs to transact quicker.
But it doesn't.
It's going to, though. Did you see the Glamsterdam update?
They've been saying that for there's been Shanghai updates. There's been like a ton of things that have supposedly supposed to make things. And again, I'm just pushing back.
No, I know.
It comes back to Vitalik Buterin is a net seller of ETH. He doesn't accumulate. And that's the founder. And that's one of your
he's
ETH
only
Foundation
got
guys.
about, I think he has 250,000 of Ethereum that he holds.
I don't like one person or multiple people having any the tokenized debt-based, the debt-based Ponzi scheme system that is a US dollar has what was Jerome Powell. Now it's got this Kevin Warsh guy and others that control and make decisions and speak once every other month on a Wednesday, that when they start speaking, markets just start moving. So these people that have these individuals and small groups of people have so much control over the movement of markets is not good, in my opinion. I think that's trash. People will say it's the free market. The market ain't free. We ain't had a free market in a long time.
It's manipulated
completely. So something like Ethereum having a foundation that can make changes without consensus. With Bitcoin, changes, the misunderstanding with Bitcoin is like you can never make changes. You just need consensus, and the number of consensus is extremely high. It's like 90%. 90% of all nodes to make any change. Good luck with that. So you're stuck with what was originally created, which I think is fine. What the original, like the whole, I was like, again, 2017, the block size wars. People want bigger blocks. People want smaller blocks. And again, if you stay in this, I'm jumping around a little bit, but if you stay in this sphere, this space long enough, you end up slaying your dragons. Like, it's happening to Saylor now. Everybody loved Saylor. Now he's like public enemy number one for a lot of people, right? When I first got into this, Roger Ver was the dude. He was the guy. Bitcoin Jesus. I don't know if you heard of him or know who he was.
I don't.
Oh, here's a history lesson. So when I first got into Bitcoin, 2014, 2015, Roger Ver was referred to as Bitcoin Jesus. If you watch any documentaries in the 2014s, 2015s, 2016s, you'll see two people. You'll see Roger Ver, you'll see Simon Dixon. Simon Dixon's still around, but Roger Ver was the guy. He wanted bigger blocks, and he was one of the proponents of the block size wars. He wanted it to be peer-to-peer cash. He believed that Bitcoin was peer-to-peer money. The other side was store value. We want it to be keep the blocks the same. We don't need to make them big. We don't need everybody to be transacting on Bitcoin. Let's save this thing like we do with gold. It's gold 2.0. And Roger's like, no, I want it. And then he ended up forking into Bitcoin Cash. You've heard of Bitcoin Cash?
Yes.
Roger Ver created Bitcoin Cash. Roger Ver was the proponent of Bitcoin Cash. Bitcoin Satoshi's vision. You've heard of that, BSV, right?
Yeah.
Craig Wright, who is fake Satoshi because he said he was Satoshi, claimed to be Satoshi, went to court, litigated it, and they said, prove it. You have the keys to the Satoshi wallet, move some coins. He couldn't do it. Fake Satoshi. So he was on the side with Roger originally, and then they split. It went from Bitcoin to Bitcoin Cash to BSV. At the time in 2017, it was crazy chaotic. If you had a Bitcoin wallet, you got airdropped, which we didn't call it that back then, but then now you call it that. All of a sudden you had Bitcoin, you had Bitcoin Cash, and you had BSV in your wallet. And it was wild because back then there weren't exchanges like there are now. You had Coinbase in New York State, and this was like pre-bet license time, and it was just wild. So again, to get back, now you had Roger Ver that controlled Bitcoin Cash. You had fake Satoshi controlling Bitcoin Satoshi's vision, and then you have Bitcoin that has nobody because we don't know who Satoshi is. He's gone. Hell, he's dead. Like you have developers, but like again, Bitcoin keeps moving because there is no one person to say, this is what I want. Because I'm a human being and I'm corrupted like me and you are. If I went and created Don's coin and I had all the greatest intentions in the world for Don's coin is going to be Don's vision. It's going to be what I want or I think things should be. And it'd be my worldview, which is to some people might be fucked, right? Yeah. I might think it's great. I might think I'm the Mother Teresa of crypto and Bitcoin, but it would be me. And it would be completely centralized. And it's that or the Federal Reserve. The Federal Reserve, which is who we're fighting against, who's making our lives miserable, me and you as middle-class people, have this system that Bitcoin is created to combat against. And then being as in deep into the game as I am, it's so frustrating to me to open up CoinMarketCap and to see thousands of coins that are mimicking what that system is. To me, when I look at ETH, when I look at XRP, when I look at Hype, when I look at Melania, when I look at all that shit, all I see is a spit in the face to Satoshi and everybody who believes the vision of Satoshi to say, we would much rather have tokenized fiat, the debt-based system, and we're just going to keep this party going over on that side. That's what it is to me. Now, again, I do understand and respect that everybody, and again, we talked about this, I'm not living on a Bitcoin standard. I don't pay my mortgage in Bitcoin. I need to mine fiat to pay my bills, to feed my family, to, keep my car on the road. So I have to find fiat. So for some people, that's jumping to the stock market in NVIDIA. Some people, it's going to a job. And I guess the only thing I could say that's okay, and again, I'm not endorsing this. This podcast is Bitcoin only. I don't endorse this. But if you're going to pick up some ETH and try to sell it for a profit to make some money, great. But the problem with that is crypto is getting absolutely obliterated. You're not making money. You can't do that in crypto. Even if you want to say like when Bitcoin ran up to 120, there were a plethora of tokens that never hit another all-time high. XRP didn't. ETH barely eclipsed it. Solana blew its load way early, never got back to what it did before. And then all those other, you go from the 10 down. Litecoin didn't even come close. It was Litecoin was 400 last epoch, and I think it got up to 140 maybe. And then you just go down the line. Even with that philosophy of I'm going to buy crypto and make money, you couldn't do that. You haven't made money since COVID in crypto.
Yeah.
In ETH, if you held ETH from the top of the last cycle to the top of this one, you made what, $50?
Exactly. Yeah. That's true.
And again, most people don't dollar cost average. We understand finance.
They get
whatever
fearful.
You buy, you dollar cost average. The average, and I'm using air quotes, investor, and me and Troy would battle on this podcast where he's the trader guy. And I'm like, trading is bullshit. It's complete and utter bullshit. Anybody that tells you differently is making money off people who trade. The actual traders do not make money. The top 1.5% of traders make money. But, Joe Blow, who works a 40-hour week job that made some money in GameStop in 2020, or might buy some whatever, like SpaceX, and they think they're trading. Like, I see it all the time on social media. These people that think you're not a trader. If you're not spending more time studying the trade than executing the trade, you're not a trader. If you're not in the lab for 40 to trade for 10, you're not a trader. You can't trade as a side hustle. There's no such thing as a side hustle of trading. You know what I'm saying?
It's not that
you're
easy.
Either in, like, there's a guy that I follow on X, Blue Collar Dangerous, and he's a trader. He's in them streets. He'll 80, 90 hours. He loves it. He's just sick. He loves to trade, and he spends all week long. I'm not sure he's made money. I don't know if he does it now, but I know back in the day, like, he'll spend all week long just studying before he executes the trade. Like, those are trade. You're sick. You are a sick individual. You are operating at another level to be a trader. So then that comes back to the conversation. If you're not buying good assets and holding them for long periods of time, you do not know what you're doing. So
it's not investing,
to look at a
gambling.
price and be affected by the price, no matter what it is, if you're a Bitcoiner, if you're an ETH guy, if you're owning real estate, if you're looking at short-term volatility and you're like talking about selling, you're going to get wrecked. And people do. Sorry,
yeah.
I
what I was gonna, back to your point about all the forks, Zcash and Bitcoin Cash and Litecoin. That was one of the points that I had written down, was that in terms of like a peer-to-peer payment system, Bitcoin is actually, in terms of its tech, it's actually really slow. But what makes it valuable is that, like you said, there's no CEO, there's nothing kind of guardrailing it. So I do agree with you from that standpoint that, just because someone's going to make a fork of Bitcoin and say, oh, it's fixated, it has a certain supply. It's what makes Bitcoin is that, we don't know who Satoshi is. And that it is the most decentralized asset, at least that I'm aware of. So
when I'm asked what the biggest threat to Bitcoin is, and if there was anything that would shake my thesis, there's probably nothing, but the only thing that would come close would be if we got a verification of who Satoshi was and they moved the tokens. That would be the only thing that would make me think twice.
Yeah.
That's the only thing that would make me think twice. And even that, technically, if they move those tokens, they would get distributed, and the way it was set up, he still doesn't have any control over them.
And that's like 5% of the supply too, because that's what, when we were talking before the podcast, I was asking you about quantum, and a lot of chains are looking to be quantum resistant by 2030. It's not that it's a threat now, but you got to always be forward thinking. And I did some research on Bitcoin, and there are routes that they can take. Like, I was looking online, there's some stuff like soft forks, not like a hard fork, that they can add. But yeah, I was just interested in your thoughts of that, because everyone's saying, well, if quantum got, let's just say, Satoshi's wallet, there's 5% of the supply, and who knows what that would do to the value. That's all hypothetical too, just because, we're not even there yet. But
yeah. Rich, I got this video here. I want to play. This is Elon Musk talking specifically about talking about quantum and Bitcoin. Can we chime this up here? It would help if we had volume. Hit the laptop volume, maybe. I did.
Yeah.
I don't know why.
It's more likely
There we go.
than not. You can also cryptographically sign things. Mathematically, we don't see any way, for example, for AI to subvert the fundamentals of mathematics and say, figure out how to hash Bitcoin easily. It's like it's not as AI can't defy fundamental math. Yeah. So you can improve the efficiency of Bitcoin hashing algorithms in the silicon, but not fundamentally crack it. So I guess cryptographic signatures and one way to do it. But I'm not so worried. I think it's more like will humanity control its destiny or not? Will we have a future that is better than the past or not? And not, with that, we can certainly destroy ourselves without the help of AI. As you look at all of the past civilizations, they didn't have AI.
Such a smart guy. So hard to listen to talk.
Yeah.
So hard to listen to talk. But I mean, he kind of breaks it down. Like AI is not going to break fundamental mathematics, and Bitcoin is fundamental mathematics. That's what makes it all work. It's the math. So I don't. Again, I'm not a huge understanding individual when it comes to quantum and how the intricacy of all of it work. I just defer to the people that are way smarter than I am, that know this stuff. I listen to a lot of spaces that kind of talk. It's a topic on Bitcoin Spaces, quantum, and they talk about the likelihood of it being quantum resistant or needing to make upgrades. There's a sect of people that believe that it needs to be upgraded, and there's others that are strain that are just like, it's math. You're not gonna subvert math.
But to be fair, like a lot of the banking system would need to upgrade. It's not just Bitcoin. It's more than
the
that.
thing I say all the time is, why are we worried about an asset that right now is worth less than 2 trillion? The banking system is worth like 400 or 500 trillion. If I have the capabilities to hack anything with quantum, the last place I'm going is probably Bitcoin. I'm going to go right into the banking system and hack that. Like, that's going to have much bigger effect and more wealth to be distributed than it is going to be Bitcoin. If Bitcoin is not quantum resistant, we have bigger problems with the traditional finance system. And nobody ever talks about that. It's like always Bitcoin, like, with Bitcoin and quantum. It's like, okay, what about Bank of America? Yeah. Or what about JP Morgan Chase? Like, how about that? Like, that's the conversation we should have. You're worried about Bitcoin. You don't even own it. The people that talk about it don't even own it. What are you worrying about Bitcoin for? Where's your bank at? Which bank do you have your money in? That's the one you should be worried about, right? I mean, that's the conversation you should have with people. So I don't spend a lot of time and energy on the quantum, because the people that are not all, because Bitcoiners do have the conversation, but people that really use that as an excuse when they're talking about Bitcoin don't own Bitcoin. What are you worrying about that for? Let's have a conversation about where your assets are, because that's going to be a problem for that asset as well if that doesn't get quantum resistant. So it's just a broader conversation in regards to all that stuff. We got a couple people in the chat. I think Troy just jumped in. What does it say? What did Troy say? I think your brother's in there too.
Yeah.
Mac Attack. And your brother's in there too. Go Dom. Nice. What's up, guys? Thanks for supporting and watching. Share it. Oh, I always forget. Dude, I'm such a bad self-promoter. Anybody that's watching this podcast, please go to my YouTube channel. If you're not there, Defion Labs Productions. Give me a subscribe. Rinaldi_Don on X, and Don NF Bitcoin Don on Facebook. Give me follows, likes, and all that good nonsense that I never do. And I just like the podcast and forget to self-promote. But yeah, I'm not overly concerned really with, and maybe that's naive. I don't know, but I'm just not overly concerned with quantum. I think there's just a lot of better conversations to have right now than talking about that.
At least in the near term. Yeah.
Yeah. I mean, this conversation that we kind of was the ethos of this is basically the crypto versus Bitcoin thing. I just think, people coming into this ecosystem usually get their feet wet with crypto. So even as a Bitcoin only podcast, even as a Bitcoin only person, to not have the conversation about crypto is doing a disservice, because the people coming in the door most of the time are coming in through crypto. They're going to buy Dogecoin or ETH or XRP, and they're going to see the lower numbers, and they're going to know that they can get more of that dollar to work for them and get more tokens. And then not realize what it is that they're actually involved in, and then hopefully jump in some spaces, get educated, and then make the conversion over.
I'll be honest, a lot of people like will even just ask me like, well, shouldn't I just buy XRP because it's $1? But they don't really understand like the market cap of it, what it would take for it to get the $10 or $100 or etc.
I'm often asked, like people will say, hey, they'll write me a private message, say, hey, I watched the podcast. What do you think of XRP? And I just write trash emoji. And that's it. I used to like get into like the fundamental reasoning of my thesis of why I don't like XRP and why I like Bitcoin. And then I realized like I'm wasting my time. I'm wasting their time because they haven't done any, you can't have that type of conversation if somebody has done any work, right?
Yeah.
It's like when you take a class in school, right? Day one, you're not going to be taking the exam. I'm not going to quiz you on questions for the final exam on the first day. We're not having those questions until you've done some studying and you understand the topic and you have a little bit more grasp and understanding. Then I can start hitting you with some of the hard stuff or giving you a reason of why you're learning what you're learning. We're not having that conversation the first day. And it took me a while to realize that. And one of the biggest reasons I even created this podcast was because I got so many private messages about like what I thought about things. So I'm like, instead of answering everybody, because I love to like engage and I want people to learn, I'll just make a video every week and people can just click on that. And that still doesn't work. People still message me.
They like the convenient route.
But it's all good. I don't mind doing it every once in a while. But like, again, I had to learn, like, I'll just direct people like, hey, go check out this article or did research this, come back, tell me what you think. Instead of just because me telling them what I think is only, you're hearing what I think. It doesn't formulate anything for you, right? I don't want you to think how I think just because I think that way. I want you to do your own work, your own research and understanding, because this is a long process. Like to break yourself away from the fiat debt-based Ponzi scheme system, it's a journey that doesn't happen overnight. And most people, I say this with complete confidence, most people, almost everybody in crypto, for sure, almost everybody in crypto has not done that journey. A majority of people in Bitcoin have not done that journey. I'm in Bitcoin spaces, maybe not necessarily speaking, but I'm listening to Bitcoin spaces all the time. And I hear the speaker speak and I hear the people come on stage. They do not understand what this is. They do not understand why it exists. They do not understand the reason it was created. They just see and want number go up. They want the price to be 84,000 next week and they'll be excited and probably some of them will sell. And it's these conversations that people are having in regards to nominal terms. And you can't, if you're viewing Bitcoin, if it's all about nominal terms for you as a Bitcoiner, go buy ETH. If it's just nominal, go buy Dogecoin. And I'm not saying that as any sort of financial advice, and I don't want anybody to ever do that, but maybe not even that. Go buy SpaceX or go buy, I guess Facebook's trading low. I guess I heard that that's good value right now.
It's actually pretty good value.
So go buy Facebook.
Stock.
I don't know. So like if it's all about nominal terms for you, go buy something that you think is going to do whatever multiple you're looking for in the short term, and you're probably going to get wrecked. Like honest to God, nuts to bolts, you're probably going to get wrecked. If it's all about nominal, it's all about short term. What should I buy now? When people are like, what should I buy now? Like nothing. My answer is always nothing. When somebody's like, yeah, I do say, when they ask me that specific question, it's always nothing. When they say, what should I buy now? I always say nothing. I say, what you should do right now is the things you're thinking of buying. You should be consuming as much information on those things as you possibly can before you push the buy button. Whenever I'm asked that specific question, that's always the answer I give. Nothing. What should I buy right now? Nothing. Because if you're asking me, some jamoke nobody on the internet or a friend that's on Facebook, what you should buy, you're doing this all wrong. Completely wrong.
Yeah. Yeah. And you notice that like a lot of people they want to buy the fad. Like memory. I was talking to you a little bit about memory. One of my biggest regrets as an investor, I had a lot of Micron and a lot of AMD, and I did sell it to buy ETH and Bitcoin over the last couple of years, thinking, okay, I thought the AI wave was, priced in, and I didn't see the after effects of memory and data centers, power and cooling. But now everyone wants to flock to it. Like, oh, can Micron go to $1,700? But there was a period I had it at 70, you know, and now it's like no one wants to touch crypto because right now it's a crypto winter. It's sentiment is weak, and that's commonly based on history when you want to buy. So
I do think, and again, I don't talk in terms of cycles anymore. It's epochs, because that's what they originally were called, for epochs. Every halving event is an epoch. So I talk in terms of epochs because I don't necessarily subscribe to the cycle theory. But I think this epoch, more than any other epoch, is the type of epoch where we could change on a dime based on a narrative shift that's hard enough of a turn where all of a sudden in a couple of weeks we're talking about like middle of a bull run again. And I'm not calling that. I'm not saying that's what's going to happen. If I was asked like gun to head what's going to happen, it's probably going to play out how it typically does. We're going to have some choppiness, and then we'll probably bottom sometime early fall like we typically do, right? And then, you know, things will kind of go. But I think there's just a lot of uncertainty right now that didn't exist before. The business cycle has changed. This AI bubble stuff is a different thing. You know, having Warsh talking the way he's talking is a different thing. The Clarity Act potentially being signed, I think will definitely, if that thing gets signed in 2 weeks, you're going to see it. You're going to see a pretty heavy pump.
Yeah.
Will it sustain? Probably not, I would guess, but maybe it does. Maybe that's a catalyst. I don't know. I'm not here to make predictions. I'm not here to say what's going to happen. What I'm going to say is I will not sell any Bitcoin regardless of what happens. We could shoot up to 200 in July. Yeah. Or, I'm sorry, in August, and it will have zero effect on anything I do. Honestly, if I'm being completely honest with you, I would be upset if we went to 200,000
because you didn't buy
because I can't. No, not that. I'm dollar cost averaging, and it means that it costs me more fiat to get it. I actually and I've said this on the podcast many times before. My favorite times in Bitcoin is this. This is my fourth epoch. I love this time because I don't have to worry about when I make my regular dollar cost average little buys that I do. I still buy like $10 worth, $20 worth, $50. I just get, like we talked about, I'm accumulating 100 sats at a time. So, but like in a bull market, I might spend $105 1 week, and then the next week it's 85, and then the next week it's 120. It's like catapulting all around on me. You know what I mean? I like where it's like 64 or it's 60, or it's 61 or it's 58. Like I'm good with that. You know what I'm saying? Like I like this drawn out, and to be fair, like this last epoch, we had, even in the middle of the bull market, like 9 months of choppiness. People forget, like the price was price ranged for like 9 months in the middle of what people consider to be
2025.
Yeah, right? It was like price ranged.
Yeah, because I mean, Bitcoin in the last 5 years, it really hasn't done as much as people think. Like, they go from 16 to 126, but over a 5-year window, there's actually like index funds that have outpaced it, surprisingly enough.
Definitely pared back.
Yeah.
There's a lot of reasons probably why we don't have the time to get into all those types of things, but, and again, that's kind of the reason I've come to my thesis that this is going to probably draw out longer than I was thinking it would have a couple of years ago. This is $1 million asset. I'll say that on record. I've said it many times before, without a question. I will say, and nothing's 100%, but I will throw 100% out there because that's the conviction that I have. Not financial advice, but I'm 100% positive at some point in the future, Bitcoin will be trading at $1 million a token. Yeah. I don't know what $1 million a token of buying power will be at that time.
Yeah,
but it will be trading at $1 million. Yeah, that's the question. That's a fair question.
But I like I was telling you before we started the podcast, even if it just averaged what Triple Q would average, about 20% a year of compounded growth, Bitcoin's on pace to be $1 million in 15 years. And people say, oh, that's unrealistic. Like they just think of it in a fiat mindset where really it's so possible. Like that's really not that, like that's not hopium.
When I got into Bitcoin, the Winklevoss twins were calling for $40,000 Bitcoin, and Bitcoin was trading at about $400 or $500. And people were saying that that's absolutely batshit insane. Yeah. These guys started an exchange, Gemini, and they're interested in the price
They're
going
trying
up,
to pump their bags.
but they were undershooting.
Well,
the
even
price.
that Tom Lee video you posted where Bitcoin was $5,000, and he was like, we recommend people to put 1% to 2% in Bitcoin, and the girl was like, "Are you serious?" Like basically mocking him. But that's the thing about Tom Lee. I know you say he kind of faded away.
Yeah, not a fan of his shift to ETH. I mean, he's way underwater in what he's doing. But I mean,
the thing with Tom Lee is that from what I've noticed, this is just my I guess my observation is that he does pick the right assets, but his timing is definitely not the best.
But to be fair to Tom Lee, it doesn't really matter if you're not selling.
Yeah,
if you're just accumulating, it doesn't matter.
Because he called, like, no one even talks about the Russell 2000. My dad, he's been calling for small caps and equities for a while, and Tom Lee said it probably since 2024, and now the Russell 2000, I think, doubled what the S&P did, for example, and he's been calling that. I guess maybe every broken clock's right once or twice, but he's been a big bull on Bitcoin, and obviously Ethereum. He's a very
it's disheartening. And there's other ones like Anthony Pompliano was another guy that was a huge Bitcoiner, part of my Bitcoin journey, because he was one of the only guys on CNBC. Him and Brian Kelly, he used to be on Fast Money back in the day.
Yeah.
Those were the only two guys on CNBC ever talking about Bitcoin. And he's kind of veered into like some of the shitcoin stuff. Like if you stick around long enough, like you stay long enough to kind of slay your heroes. And there really aren't any heroes. You know what I mean? Like the guy most responsible for my journey was Andreas Antonopoulos. He was vital in the early stages of videos for me to consume when there wasn't many in 2015, 2016 to really get under the hood of what everything was. And it still took a while. And Saylor obviously took it up a notch, and some of the other guys that exist now that speak really well and eloquently. And there's just so many podcasts to consume and stuff like that now. But this is a tough ecosystem. Like even doing this podcast, like, dude, people don't watch this now. Like there's not people aren't really watching. We've got 42 people watching this right now, and half of them are probably your friends. Like people are just not into Bitcoin and crypto because they're all worried about number. Like if people understood, like the people that understood, like if you played this 10 years from now in the future,
they look like geniuses.
The same way as like when you look back at like when me and Troy were filming
FTX,
me and Troy filmed a podcast where the price was 18,000. And then 2 years later, it was 120. And I was telling people on that podcast, buy Bitcoin, straight up financial advice, buy Bitcoin.
Yeah.
And where it was like the bottom was falling out. And I'm just like, this is wonderful. This is beautiful. Like, you know what I mean? Like
I always tell my dad the day that FTX collapsed, and then a couple weeks after that Gemini earn happened with Genesis, and my money was locked up. And I told him, like, little did everyone know, like, that all that catalyst was the capitulation. That was the bottom. And I feel like, I mean, this is speculating, but going forward over the next few months, like, could there be something? Like, could it be Saylor just selling more aggressively like we've seen this morning? Or what is going to be that final flush that kind of washes out, as Saylor would say, the tourist, and what gets the train rolling again? So
put this up on the screen, Rich, real quick. You can't really see it. It's too small. But this says owning one Bitcoin is a bigger flex than owning 10 rental properties. Anybody that's in real estate will look at that and feel some type of way and argue against that. I 100% believe that. And it's not me just saying that to promote anything or to tell anybody to do anything. And I've had arguments with people that I know in real estate, and they'll tell me, and again, they're stuck in obviously right now owning 10 rental properties is worth more than one Bitcoin nominally in US fiat dirty debt-based terms. Yes, I'm not going to argue that. Most portfolios of 10 rental properties are probably worth more than $64,000 right now, and also bringing you in cash.
Definitely the average house.
I would rather own one Bitcoin long-term than 10 rental properties.
I agree with that, just because in terms of the real estate market, I feel like it really just keeps up with inflation in terms of its growth. Plus, people don't think of maintenance costs and all them added things. Where Bitcoin, there's no brick and mortar. You own it and you hold it.
Never have to pay
And
anything on
that's,
it.
yeah,
There's no risk, no counterparty
that's
risk.
the
It's
beauty
just-
of it. And
yeah.
just like, even just sending it around, you know, I'd send someone $10 of Bitcoin or something. And it's like, it's so much easier than buying all these, you know, gold and silver quarters. You got to worry about how am I going to sell that off or, so yeah, I mean, I would definitely rather own Bitcoin than real estate for the next, you know, decade plus.
Well, we're gonna wrap this up. Before we get going, you want to tell them where they can find you on social media? Anybody that's watching,
I don't have no page or anything, but feel free to add me, Dominic Macri. Always love talking finance, and thank you for the opportunity, Dom.
Absolutely. I want to thank you very much for coming on here, having the conversation. I know, you know, it can feel kind of weird because I'm the Bitcoin guy, and I know I hopefully you didn't feel like I was coming at you in any sort of way. I think that was a good back and forth conversation. I think it served the purpose that I was hoping it would serve when I asked you to come on. As always, as we end this podcast the same way for the 140th time, don't trust, verify. Peace.